Welcome to Next in Tech, an S&P Global Market Intelligence podcast where the world of emerging tech lives. I'm your host, Eric Hanselman, Chief Analyst for Industry and Company Data at S&P Global Market Intelligence. And today, we're going to be talking about the Big Picture reports, a set of reports that are just out talking about a range of different subjects. And with me today to talk about them are Chris Rogers and Lindsey Hall. Welcome to the podcast to you both.
Well, thank you for having me. Excited to be here.
Yeah, thanks, Eric. It's great to be back. I think it's been over a year since I was last on the podcast, so finally got invited back.
All too long. Well, if you're not careful, we might make a habit of this. So all three of us are part of the teams that have been putting together the Big Picture reports. I'm putting together one on the agentic AI. Chris, you're talking about supply chain. Lindsey, you're talking about sustainability. I guess before we get too far into it, maybe do a little bit of background in terms of what the reports are on. So, Lindsey, on the sustainability side, what are you covering this year?
Well, this was a really fun year to be writing this because, as you may well know, sustainability has been through enormous change. The sustainability sector has faced a lot of upheaval in recent years. In 2025, heading into 2026, we've got extreme weather events, we've got policy shifts, geopolitical volatility. These are just some of the big factors that are reshaping the way companies, investors, and governments are talking about sustainability, and also within that broader sustainability bucket, climate and the energy transition. And that's all around the world. So we're a decade on from the Paris Agreement on climate change, and it's clear that the world will overshoot the goal of limiting global warming to 1.5 degrees Celsius. That's relative to pre-industrial levels. And so that means that we have companies, investors, and policymakers evolving their strategies. What we're seeing is this pivot from a focus on mitigation, net zero, and decarbonization. And now a lot of the conversations are increasingly revolving around climate adaptation and resilience. Adaptation and resilience are really becoming the buzzwords, and companies are asking, what steps can you take to prepare for a warming world? We're also seeing rising understanding of the significant cost of inaction. So at S&P Global Sustainable One, we looked at the world's largest companies that make up the S&P Global 1200 index, and we found that without adaptation, physical climate-related risks for those companies are projected to reach $1.2 trillion annually by 2050. At the same time, we did another analysis and found that only 35% of companies actually have a climate adaptation plan in place. So those are some of the climate factors that we're looking at. And then in the report, we also look at the impact of policy volatility, which is another big factor reshaping the energy landscape. In the U.S., federal reversals on clean energy policy have slowed renewable growth, and we see countries like Australia and China climbing the global rankings for investment attractiveness. At the same time, we're seeing market demand for clean tech remains really strong, and we're seeing major investments. We're projecting major investments over the next 3 years as solar and battery costs continue to fall. And just one last note I'll end on, Eric, is that I last week attended a climate action conference in Sao Paulo, Brazil, which was just before the UN's annual climate change conference. The parties, COP30, kicked off in Belém, another part of Brazil. And a lot of the private sector was there. And here's how Bank of America's global head of infrastructure and sustainable finance, Karen Fang, put it during a panel. She said that, quote, "The momentum cannot be stopped." And there she was talking about the energy transition and why renewable energy makes economic sense. And that's something that we're really seeing the focus on at S&P Global. And we're also seeing across sectors this realization that climate resilience and adaptation, they're no longer optional. They're seen as essential to long-term business success.
These are fundamental business decision processes. And, the policy winds may blow in various directions, but businesses still have to get things done and, more importantly, manage risk and understand what those longer-term challenges are in terms of how they're looking at operating their businesses in an evolving world. Chris, you're looking at supply chain. What are top concerns, and what were you covering this year?
Yeah, so I think Lindsey said she had a fun year. I think we've had a distinctly unfun year. 2025 has just been kind of all trade policy all the time. And that has led corporate decision makers and, frankly put, policy decision makers to become very reactive, to become very tactical. And so what we were looking at going into 2026 is if we make the assertion that, uncertainty is the new certainty, then what can we describe as the potential positives, the opportunities that emerge in supply chain? Big one is obviously the Trump administration's tariffs are pushing everyone away, but it's also pushing them together. So we're starting to see a lot more large-scale free trade deals coming, and that's helping to liberalize trade really around the world. At the same time, companies are now able to say, right, we understand what tariff uncertainty is. We can now move beyond some of this tactical decision-making around inventory building, price adaptations, and to start thinking about longer-term investments. And we're dealing with some pretty big numbers here, right? You've got to work out how to deal with over $600 billion worth of tariff costs and how those spread through global supply chains. So companies are having to think a lot more strategically about that. Now, one of the elements that we drew out of that is longer-term investments in reshoring have been a great way to drive long-term economic growth, particularly for emerging markets. The ASEAN countries have been the biggest winners there. And the question is who wins next? And actually, when we think about the future, the competition is no longer just about one country competing with another to get that reinvestment in money. It's actually now competing with industrial robotics. So you could effectively move your manufacturing to the US for the North American market or to Germany for the European market, because despite high labor costs, increasingly you can do that with robotics. And then that brings us out into this concept of enabling the future. So how supply chains are both going to deliver things like the investment in AI, including data centers, and also including the impact of, I guess, what we're now calling physical AI, which back in the day was just called robotics, and before that was just called automation. So, that's kind of the circle of what we've been looking at for 2026.
Well, it's all AI. I mean, come on, Chris. It's and of course, my end of the set of reports was dealing with AI, and we have had a year in which I don't know if we've reached peak hype at this point yet, but of course I was delving into what is probably one of the hypier sides of AI, even, which is the transition into agent-based action, and whether or not that happens to be represented in the physical world on the robotics side. The core part of what we're looking at in that report was really what the shift is in terms of how AI is used, and moving from what has been really the model-based chat-style interaction, and that shift into actually taking action, and whether or not that happens to be in the physical world. Most of what we're looking at for agents today are still that the virtual capabilities that agents can do, how those start to impact commerce, and some of the requirements for infrastructure this is placing. We've come from a number of years in which there's been significant focus on the infrastructure requirements, on the resource requirements, on the supply chain requirements to be able to feed the AI infrastructure beast. And the shift to agentic only accelerates that, because you go from having a human moderated interaction to now having automation in the form of agents that will consume at an even higher rate. And that brings me to what is probably one of the ties between these three reports, which is that we already have concerns about sustainability with the trajectory of data center building, with the power concerns that AI and ever larger data centers start to put together. We're starting to step into the gigawatt data center environment, which the idea that we moved from hundreds of megawatts and taken the stair step into gigawatts starts to get us into a very different environment. Of course, all of the supporting capabilities, things like water requirements and water stress that creates. But then, of course, the supply chain side of this as well, which is keeping the flow of not only semiconductors, all of the various materials, being able to look at also the global deployment and where these technologies go, and some of the geopolitical aspects of where they can and can't go, start to add even more complexity to this point. But I think, and the other part of this is, of course, we do face an awful lot of uncertainty in all three of these disciplines in terms of where these are headed. On the sustainability side, their AI has had certainly, I think, at least 2 or 3 years now of increased concern around this. Lindsey, on the sustainability end, that clearly is having some impacts and raising concerns more broadly.
Yes, certainly. And Eric, you said you don't know if we've reached peak hype yet. I would say no, not quite yet. In fact, one of our key takeaways from the recent Climate Week in New York City in September 2025 was the fact that AI and energy are redefining geopolitics. And we'd love to hear Chris's views on this, because part of that conversation touches on clean technology supply chains. And we heard a lot of discussion about the fact that China is dominating clean tech supply, and that ranges from rare earth processing to lithium-ion battery cells to hydrogen electrolyzers. We heard that widely acknowledged at Climate Week NYC discussions, and that continues through to COP30, the UN climate change conference of the parties that's happening right now in Brazil. And there's limited belief that there will be credible challengers in many key segments of this space.
Well, and actually, I just want to point something out. You mentioned Climate Week, and I wanted to point back, because you were saying that business is still concerned about this. There are fundamental economic drivers to sustainability. And we had heard a lot of concerns that, was Climate Week going to be smaller? Were there going to be challenges to even making the event happen? And it was, my understanding was, packed, lots of activity, a whole lot of interest, which really seems to be a proof point around the idea that, again, depending upon policy wins, climate is still so critical.
Yeah, absolutely. We heard that same kind of trepidation or uncertainty heading into Climate Week, and there were reported 100,000 attendees, which surpassed prior years, and more than 1,000 announced events. So we did continue to see that momentum. I will definitely say, and this is something that we cover in the big picture report on sustainability, that the way companies talk about their sustainability efforts, the language they use, is definitely shifting and evolving. And we're seeing, again, a shift away from just talking about decarbonization, although that remains really key. How do you mitigate your emissions? And a shift towards this focus on adaptation and resilience. Those are the kinds of terms that we're seeing as slightly less loaded, slightly less politicized, at least in a U.S. environment. And then the other kind of buzzword that we're hearing a lot is pragmatism. So companies are talking about, how do you take a pragmatic approach to your sustainability goals? How do you make sure that your decisions in your sustainability strategy make good business sense? How are you tying sustainability to your financial decision making? These are some of the terms that we're hearing.
And it's not that we haven't also seen disruption that has more, I guess probably midterm impacts on the supply chain. I was thinking some of the discussions that were coming out of on the maritime side, on IOM, and even fundamental things like, what are we going to do with fuels for ships, and some of the disruption that has happened of late. That starts to weigh into supply chain, although that's probably a little further along, because in terms of some of the supply chain issues and some of these new players that are picking up, that's had a whole set of differing impacts in terms of where that's going on the supply chain side.
Yeah, absolutely. I think the comment you made earlier about kind of the winds are blowing in a certain direction, it doesn't mean they're blowing constantly and that they don't occasionally reverse. And we've seen that, as you mentioned, in shipping. The shipping industry, in many regards, is at a very important juncture at the moment. We were supposed to have new rules from the IMO, the International Maritime Organization, requiring greener shipping. I mean, that's a very short way of, like, there's a whole other podcast on this topic. But the danger is when you miss those kind of regulatory time hurdles, it allows or leads companies to make long-term investment decisions that could set that greening of shipping back by decades. Because typically, when you buy a new container ship, you expect it to last for 20 to 30 years. And most of the big ones that have been ordered have been dual fuel, so LNG and oil capable, rather than necessarily being fully set for green fuels, so for naphtha and ammonia-based technologies. Because of that IMO delay, we may still see the big global shipping companies continue to invest in greener shipping, but everyone else will just go back to investing in the regular fleet. More importantly, it means that the older fleet, the oil-powered fleet, will continue for quite some time. And that becomes a challenge for any firm that's trying to build a properly green supply chain, right? So if you're building your new data center and you want it to be, quote, fully green, then that's got to include the build process. And that means you've got to think about the shipping. It means you've got to think about the steel that's going into the frame. It means you've got to think about, are the jets that are bringing the servers over running on sustainable aviation fuel, or you bought your carbon credits? And so there's many, many different parts that have got to come together at the same time. And I guess my concern from a green supply chain perspective is that the rush to build these data centers means that maybe those considerations are falling down the order of it. I don't know if that's something either of you have seen, that kind of rush to get capacity in place means the green aspects are being put to one side, or are companies still making best efforts?
On the data center side, there is, on the construction side, I think there's potentially less focus, as there is that heavy-duty scramble. The interesting thing is, on the operational side, though, there's a lot that's going on, not only in terms of how data center operators are running their facilities. There's a strong focus in terms of more efficient operation, shifting to grid supply. For the hyperscalers, they're also investing in green generation. If you look at the power purchase agreements, we talked about this on previous episodes, hyperscalers have got over half of the renewable power purchase agreements that are out there. The challenge, of course, is having a grid that can get those green electrons actually to the facilities that are actually consuming them. But the other part of this is that we've got data center customers who are demanding green power capabilities in those facilities. And especially in the cloud provider side, consumers there that are demanding visibility into the green nature of the actual capacity. So you've got the various hyperscalers now providing dashboards for carbon impacts for the various facilities they operate. And you may have seen similar kinds of things in terms of with what you're looking at on the sustainable side.
I think the way that I'm seeing this play out is this shifting focus towards energy security, energy affordability, energy reliability. And that's been positioned almost as being in competition with sustainability, and something that needs to be balanced. And this, every year, S&P Global hosts a big energy conference called CERAWeek in Houston, Texas. CERAWeek is sort of known as the Davos of energy, or the Super Bowl of the energy world. This was one of the big areas of focus for attendees in 2025, this need to satisfy the energy needs of the AI boom and the need to prioritize energy security. And I think I've also more recently, that took place in March, and more recently I've been hearing some pushback on the idea that these different things need to be in competition. And I mentioned at the beginning that I was in Brazil last week for a pre-COP conference where a lot of the private sector showed up. And one of the big messages that I heard out of that conference is that profitability, energy security, energy efficiency, all these things don't need to be in competition, and that you can actually have economic growth alongside sustainability. So it's been interesting to see how the debate about how we talk about these things has evolved as well.
Well, and the other thing, especially when we start thinking about the AI infrastructure demand And what is this urgency for power? Well, surprise, surprise, renewables, in fact, are some of the most rapidly available. You can stand up wind and solar much more rapidly than you can put together a large gas-fired power plant. And certainly people keep talking about nuclear as zero carbon. Standing up a nuclear power plant is going to take you probably the better part of the decade, the way things are going right now. And on the supply chain side, the turbines to actually turn all of this thermal energy into actual electrons, there's a huge queue to be able to actually get access to the turbines to run all this. So there is that renewed focus of renewables as being the right here, right now energy source. Of course, it's a matter of now being able to back that up with battery technologies, so you've got consistent capabilities to get to the kind of base load functionality you need. But yeah, it's time frames start to come into this as well, and are impacting on the supply chain side.
Yeah, that's right. And I think it's pretty obvious that it takes a long time to build the right sort of power infrastructure. But I think certainly when we speak to our customers in the technology space, the recognition of just how long some of those can be, we look quite closely at power transformers. Obviously, it's a global business. They're used globally. Anyway, you've got power, you're going to need these systems. And the backlogs are still measured in years. And so it's not a surprise where we've seen, not just in the US, but in other countries where there's a rush to build up the data centers, that desire to use local power, so you don't need the big grid connection. You're not hauling power long distance. But still, when we look at the equipment space, the energy equipment space, you keep then running into these kind of trade protectionist issues. Copper and steel and aluminium are all covered by tariffs in the United States. China, as Lindsey mentioned earlier, is very much kind of dominating the renewable energy and battery space. And some of that has been brought into focus recently in some of the, let's say, disagreements there have been between the US and mainland China, and also, frankly, between mainland China and the EU, that have stemmed out of China's dominance of the supply chains for renewable energy and for all of the components and materials that go into them. And in fact, one of our expectations for 2026 is we're going to continue to see these rivalries play out in individual components, in built systems, in access to technology. What we've seen in 2025 is, in many regards, only the initial skirmishes in some of these areas, because, frankly put, China's done an incredible job of building up all of these supply chains. And there's this very hackneyed phrase of it as an overnight success that was 10 years in the making. And, that is absolutely, I think, where Europe and North America is right now in facing some of these supply chain bottlenecks. It's not wave a magic wand, wave a tariff and apply an investment incentive and suddenly it will all be fixed. Like, this isn't just an issue for 2026.
Yeah, it's rare earth smelters are not exactly something that you build overnight, and especially in terms of some of the overall economic perspectives. And Lindsey, you were talking about rare earths and some of the challenges that exist on the sustainability side as well.
Yeah, and I will mention, again, just going back to that CERAWeek conference, where you have so much of the energy sector as well as the tech sector represented. And in the U.S., deregulation and permitting reform were one of the biggest areas of focus. And at the conference, there were U.S. government officials who noted that building out infrastructure needed for an all-of-the-above approach to energy is going to require a major revamp of federal permitting regulations. And when I say all-of-the-above approach to energy, just to clarify what I mean there is that's another big message that we've been hearing from CERAWeek and also more broadly from the energy industry, this idea that as AI drives this power demand, as we have more need for power due to this AI boom, we're also going to need to take this quote unquote all of the above approach to energy. And that all of the above approach is going to include nuclear as well as oil and gas and renewables like wind and solar. That's the message coming from the energy industry, at least. And at CERAWeek this year, we had more than a dozen energy companies and tech leaders, like your big names like Amazon, Google, Meta, They signed a large energy users pledge to support a goal of at least tripling global nuclear capacity by 2050. So that just gives you a little sense of how some of these conversations are going.
Well, and we're also, the 2026 CERAWeek is just on the horizon.
Just around the corner, yeah.
Coming up towards the end of March. I'll include a link in the show notes to point our listeners into a little bit more information there. We have covered so many different topics, so far and wide, but we're at time for this episode. I want to thank you both for being on.
Oh, thanks very much for having us along.
Yeah, I really appreciated the opportunity to be here, Eric. So thanks a lot.
Well, and a lot more conversation to have. I'll point our listeners to the links to the big picture reports. Take a look at them and the perspectives. We've only covered 3 of these. There's so many more altogether. But that is it for this episode of Next in Tech. Thanks to our audience for staying with us. And thanks to our production team, including Sophie Carr for on mediation, Kira Smith on the marketing and events teams. And I hope you'll join us for our next episode, because there is always something next in tech.